Welcome to Beyond Wealth, Success Unscripted with Matt Calnan. Discover the personal drive, professional journeys, and business strategies that have made a real impact. It's success from the inside out.
Welcome back to the show, everyone. Today we're chatting with Steve Fylypchuk, a certified business intermediary who specializes in helping business owners smoothly exit their businesses with maximum value. So welcome to the show, Stephen. Why don't you start off by telling us a little bit more about yourself and what you're working on?
Sure, with pleasure. So I'm born and raised Calgarian, and in the past, I've been a small business owner myself. For the last 10 plus years, I've been working with Murphy Business Sales as a business broker. I help people sell their business, to put it simply. I work somewhat like a realtor in the sense of how I deal with my clients and how I do my job. But instead of selling real estate, I sell what's inside the four walls. Sometimes it's a share sale, sometimes it's an asset sale, but it's a going concern. And so if people have a small to medium-sized business that they would like to sell, I'm your guy.
Okay, so you're really on the representative side of the sellers on that.
That is who typically hires me.
Yeah.
In my world, there is often just the one broker or intermediary in the deal.
Right.
And that's just based on a couple of things. But for the most part, when a business owner hires somebody like myself, it's usually due to our efforts that the buyer is brought in from our advertising, marketing, networking, et cetera, our own personal list of potential buyers. And so we often become a transactional broker and we mediate between the two parties.
Right. This is going to be, I know, an unpopular opinion with some people, but I'm going to share it anyways. A lot of times, the people that are helping a business prep for that transition are an accountant, a lawyer, those professionals that have been working with the business. And quite frankly, I think they're really shitty at it, at prepping them a lot of the times. Is that something that you work with those professionals, or you're working with the business sellers to ensure that it is done efficiently and effectively?
Okay. Well, first of all, let me say those two roles are incredibly important in my transaction.
Yeah,
I am like a coach or a quarterback, and there are many players on the team, and we can't get the deal done without lawyers and accountants. As far as prepping the business for sale, there is, again, a very important role for those people, for those particular professionals. And if they do what I think they should do, I think it's great. Now, on the other hand, to go to not your comment, but I guess what you've heard from maybe others, if a business owner is asking their lawyer to help them sell their business, I would say that's a mistake. Again, the lawyer or the CPA has an important role, but to put it simply, I think they should stay in their lane. And sometimes if a seller were to say to me, or a business owner were to say, well, I can just get my accountant to do it, to help me do it, he won't charge as much. My response to that would be, well, how many businesses did he sell last year? How many does he have on the roster today? Do you think his accounting practice might get in the way of him trying to sell your business, which isn't necessarily in his wheelhouse? So that's how I would respond to that. They should do what they're trained, which I am not, to do, and let me do what I'm trained to do.
Yeah, for sure. What types of businesses do you typically work with, or is it kind of a full gambit?
I don't specialize in a specific industry. Some people do, and it works well for some, not so well for others. At the moment, I've chosen basically to work with, I won't say absolutely anything. I mean, one of my simpler rules is a business that I think I can sell. Okay. And that's going to come down to a couple of things. Profitability is certainly a major factor, but not the only factor. If it's a little bit too small, I may pass it on to a colleague that's maybe a little bit newer to the industry and willing. In the beginning, will take on anything. At the moment, I've been doing this 11 plus years, and I've raised the bar a little bit, that kind of minimum. And so and it's not written in stone, but businesses that are worth about $250,000 and above to maybe that $3 or $5 million mark. That's kind of the area that I work in, but not a specific industry per se.
Right, right. Yeah, I would assume it's probably more challenging on the smaller businesses because there is a lot of there's probably not the systems and processes in a lot of those businesses that creates a smooth transition in a lot of cases.
Yes, that I mean, there's a couple of different reasons. Sometimes, well, you don't get maybe as sophisticated of a buyer, for example, who's looking
Yeah,
to buy $100,000 business as a $500,000 or $1 million business. That's part of it. The fees involved, and they start getting, well, do I have to use a lawyer? Yes, at least if you work with me, you do.
yeah, yeah.
Um, and things like that, and people wanting to like. I was recently asked by someone, well, don't you have a form just for the asset purchase agreement? I said, no. If first of all, I don't use fill in the forms for that sort of thing. That if it were a liquidation sale and it was just a restaurant or something and we're clearing out the assets, which is something I really don't do, but maybe a realtor or someone's doing that,
Yeah,
fine.
yeah,
But with a going concern and you've got employees involved and you've got a lease involved and on it goes. So yeah, smaller deals have sometimes they are harder to do than a bigger deal.
yeah, yeah. What do you generally see? And I know this is industry dependent as well, but as kind of a rule of thumb, what are you typically seeing in terms of multiples on profitability and what the business is ultimately selling for?
Yeah, yes, it certainly does depend, but about, well, 2 to 2.5 times
Mm.
is, I hate to say a true rule of thumb,
Yeah,
but
yeah.
for many businesses, it's going to follow that range. Sometimes it's going to be less than 2. And
Mhm.
also earnings, like times what is extremely important.
Yeah,
Um, Again, sometimes a business owner will say, well, like usually they'll sell for about 3 times earnings, right? Well, first of all, let's define earnings. And second of all, you can't just say they, businesses will.
yes, yeah, yeah.
So yeah, when I'm selling let's say it's a 3 to 5 person business and the owner's taking home 150, $200,000. He's working in the business full time. That 2 to 2.5 and 2.5 could be sometimes a little bit on the high end, can be.
Mhm.
Again, there are exceptions to that rule, and
Yeah.
how that income is coming in. Is it like, is it a recurring revenue model with subscriptions, that sort of thing, or is it one-off project work? There's a lot of factors.
Yeah, yeah, for sure, for sure. One thing I've seen in the business broker world is quite often there's a lot more people interested in buying businesses than there are quality. And I'll say quality because
Mhm.
one of the things you touched on is profitability is a factor in there. So
Sure.
there's a lack of quality businesses in that. Is that what you see as well?
I think that's fair. I think we've always, I mean, anybody who's been in the business for a while now has got a pretty good buyer list.
Hmm.
Of course, buyers also, that list gets staled. It's stale because a buyer might have already bought something. They might have
Yeah,
moved. They might just change their mind. Who knows? There's lots of reasons. So you can't guarantee just because you have 5,000 names, if some of
yeah,
them are 5 years old or 10. But but yes, there are always more buyers. Now, the key though is a buyer who's willing and able to make the
yeah.
purchase. That's another number.
Yeah, well, to your point, yeah, there's a lack of quality businesses, but there is also a standard of a quality buyer, right? It's somebody
Absolutely.
that says they want to buy a business, they might not have the means, the expertise, whatnot to do that. So they
Correct.
need to be qualified as well. When you are like, let's say that you do get a new listing and it's a profitable business. Let's say they're making $250,000 a year. Um, what's your process that you're going through with that selling business, and then to go and take that out to the quote unquote markets on that buyer side?
First thing is to learn a little bit about the business, just the basics, high level.
Yeah.
Then, if the seller would like to go to the next the next step, I will ask him or her for their financials. So then I'm going to do evaluation and come back to them with what I think is a reasonable asking price or price range. They don't have to list for exactly my number, but we have to be on the same page.
Yeah. Yeah.
And anybody, again, in my industry has come across this. I tell a guy his business is worth 1 million and he says, I can't sell it for less than 2.
Yeah.
Again, in the early days, anybody like myself might say, oh, okay, and they just kind of hope and something will either I'm wrong or the seller will eventually lower their price or something. Not a truly successful business broker will do that for very long. At this point, I'll just say no. But let's assume we agree to work together. Then I'm going to gather even more information, and I'm going to put together what I call a confidential information memorandum, a SIM. Sometimes there are other names for it, but same idea. It's a marketing package. There's 2 parts to it. There's the public portion, which will go on websites, or I will directly email to potential buyers, that sort of thing. And that part will be anonymous. So it will not identify the business specifically. It'll give enough information to hopefully attract the right buyer. The second part is the full package, and that's going to give the history of the business, how many people work there, how long they've been there, what they're getting paid, the product service mix. We're going to try to answer as many questions as we can for the buyer. We never succeed perfectly, but we're pretty good at giving them enough information where they can make the next decision as to whether, I want some more information. This looks good, or it's not for me, and they pass. And so, okay, so then we go to market. The buyer inquiries come in. We get them to sign a non-disclosure agreement, an NDA, and there's only so much qualifying we can do per se, but we're going to try to, I'm going to ask questions such as what kind of a down payment do you have? Because not everybody wants to answer that, but if, again, it's $1 million business and the buyer says, I've got $50,000, I'm going to tell them sorry and maybe try to steer them in a different direction.
Yeah.
If a buyer is looking for 100% seller financing where the seller is going to carry all, it's not realistic. So I'll do what I can to a reasonable degree. Then I'll release the full SIM. If they like what they read, a few more questions will be presented. We'll get those answered. We may then go to a buyer-seller meeting or possibly a site visit, depending on the business. Some businesses really, there's nothing to physically see. It's not a big deal. But again, have that conversation. They like what they see. They will give us an offer, usually in the form of a letter of intent. And that's something, I can provide them as a template. That part, it's not exactly fill in the blank, but it's close. It's not bad. And they can change it accordingly. I can even give them a little bit of guidance in not how much to offer, but just how to structure a deal, because most buyers haven't done it before.
Yes. Yeah.
We'll do a little bit of negotiating back and forth, and I'll be like that mediator in the middle of the deal. If we come to an agreement, we execute the LOI, and I tell the buyer to take that to your lawyer and have them prepare that final purchase agreement. And then the buyer will start their due diligence, which is open-ended. They will approach the landlord for a lease transfer if there's a commercial lease involved. They will go to the bank at this stage. They will almost always need a loan. If it's a franchise, we'll also at this point introduce them to the franchisor and start that. But that's, in my case, maybe, 10% of the time. Most of the time, It's not franchise.
Yeah. Yeah.
Assuming everything goes well, no red flags, the bank says yes, the landlord says yes, we have a deal. The lawyers have papered the deal in the background. We get to the finish line and the money changes hands, the keys change hands, transition period begins. And that's something we've pre-negotiated. Let's say it's a month. The buyer will work with the seller, and that'll be part of the purchase price. And the seller will get the buyer up to speed. When that is done, typically the seller's obligations are finished too. They can always expect a few phone calls or something like that.
Yeah.
And that's the basic process.
Yeah, no, that's interesting. What's the typical? Again, there's probably nothing typical in this, but what is that timeline look like? Because I think maybe for people that haven't gone through this process, this is not a week. This is not even a month. Like this is extended, right?
It's a question I'm always asked. So when it comes to selling, I tell people it takes about 9 months or like that 6 to 12 months from the time that seller hires me to hopefully we hand over the keys.
Yeah.
That's an average. And it's not just my personal one. I've received that same number from many sources. It's pretty typical, but again, exceptions to every rule. When it comes to the shorter version or the shorter portion, like after we have an offer, the negotiating of that offer might take a week, give or take. It's not like a house sometimes where you finish off by the end of the day. So let's say it takes a week. From there to closing, I tell people to expect it to take 6 to 8 weeks. Again, there's the odd exception. It rarely gets much shorter. We have I'm going to say three things that can take up the time. One is the lawyer. They have other clients, or the lawyers in this case. Number two, the landlord. Sometimes it can be really quick if it's a smaller landlord, really efficient. Larger management company, easily take 6 weeks. And the bank. Again, the bank can easily take 4 to 6 weeks for them to get their ducks in a row. One extreme example with a landlord was I sold a small automotive repair shop inside a Shell gas station. Shell is the owner, landlord, based in Texas. A management company in the middle. And this is the worst case I've ever experienced. It took 6 months to get landlord approval.
Wow.
That's an extreme example. Do not take that as typical.
Yeah.
By any stretch.
Yeah.
But
That is a lot.
I kept the deal alive. That was
which is what matters, right? Yeah, that's what matters.
Normally a buyer might have just walked away.
Yeah. What do you tell businesses if they are in that period where they're saying, you know what, I think we're going to look at that sale option, that succession plan, whether it's a year out or 3 years out or 5 years out? What are you telling those businesses? What do they need to do to prepare for that?
Well, it's a bit of a longer conversation, but I will try to give them a few good points. Again, profitability. You want the business to be making money. Now, you can't just snap your fingers and make that happen, but you can stop running personal expenses through the business to any great degree. Okay. A little bit is not a big deal, but if it starts to get egregious, it gets harder to convince a buyer that they're real, like personal expenses. And two, it gets harder to convince the bank that has to lend based on your bottom line. So that's the first thing. Secondly, if the owner's too much an integral part, try to work yourself out of a job. Again, you can't snap your fingers and do that, but if you are looking at it for 3 to 5 years out, it might be a little bit easier. And even if that's not really realistic, you can document all your processes. You can put systems in place. You can make it so that the new guy steps in, you give him some face-to-face training, but he can look at a binder and find everything he needs. Okay. You can have that.
Processes and procedures in place, right?
If you have too high of a concentration of revenue coming from 1 or 3 clients, try to diversify that if at all possible. Again, not always easy, and here's something that, some businesses, of course, they have unreported income. Okay. Not something I can ever really work with. I will not put that down on paper. I will not tell a buyer. A seller might tell a buyer face to face. And I will tell the seller, again, if you have time before you go to market, please stop and record everything. Again, it increases your bottom line and makes your business easier to sell and for a higher number. And you don't have to hum and haw and try to prove something. It's on paper. If you've declared it to CRA, a buyer and a bank usually accept that.
I faced that one time where we were buying a business actually, and I think they're about 200,000 bottom line, and we're going back and forth on the price negotiation. They said no, like it's got to be higher than that because there's more there. It's like, what do you mean there's more? That like, how do I know that? You can tell me that. I need to see it. I need to see that in there. So to your point, is you got to run it legitimately if you're looking for a sale process, because nobody's gonna pay you for that.
And that's exactly that is what I was going to say to you now. I'll tell a
Mhm.
seller, that's great, fine, whatever. I can't get you paid on that portion.
Yeah. Yeah. So do it right. Do it the way it should be, and just get it done properly.
I even tell people, okay, we're going to market next week. I'll tell them, okay, please, as of now,
Yeah.
stop.
Yeah.
Because we might not have an offer for 6 months.
Mhm.
And if it's because if it's minor, if it's just a few bucks, it's irrelevant. But if it's
Yeah.
substantial, which it can be, well, now we have 6 months. And, it's a little bit more believable
Yeah.
that, yeah, look, I don't know, $25,000 more
Mhm.
straight to the bottom line.
Mhm. Yeah, and that's the thing. It goes straight to the bottom line, right? In on the revenue side, into the bottom line, because all the expenses are being accounted for. I guarantee that. Okay, enough on that topic. let's let's switch to the buyer side now. If somebody is interested in purchasing a business, what advice do you have for them, or what do they need to do to prep?
Well, they can start by doing a little bit of research. Part of that, of course, the internet is, perfect. I mean, it's got a
Yeah.
ton of information, but you might buy a book or two from Amazon, and there are several. And if you're new to the game, any of those books will give you some new information. And
Yeah.
even if they're US authors, which is the majority of them, but still, you can learn a few things with one caveat. Do be careful, take it with a grain of salt. Uh, I recently I have a book on my shelf. I still haven't quite finished it, and it's kind of um, uh, build. No, sorry, buy then build, and it's quasi famous within my circles, but written by an American author. For the most part, it's a good book, except right out of the gate, he tells a real life example, and it's based on American systems. One of them being a certain the SBA loan you can get, which
Oh yeah.
he tells a story about being able to buy a business with something like 10% down.
Hmm.
Extremely unlikely in Canada.
Hmm.
And he talks about multiples, which are higher in the US, dollar for dollar, because of easier access to capital. So you have to be a little bit careful there. But that's the first thing. Educate yourself a little bit. Look at, and start looking at businesses for sale. Ideally, you will see the asking price and you'll see the cash flow. Sometimes you won't, but that helps. Again, there's no hard and fast rule. Sometimes you'll see weird multiple, or at least what appears inconsistent multiples. And like, well, how come here it's this and here there could be various, and sometimes the reasons aren't great. Like, well, because the seller dictated the price,
Yeah.
for example.
Yeah.
But at least it gets your feet wet. Um, get on the mailing lists of people like myself so that you're getting our emails and you're seeing what's for sale. Those are that's to get started. Also, realistically, think about how much you have to invest. Possibly go to the bank. The BDC has been my number one lender over the years. Talk to someone there. They will be happy to say, hey, I've got this much. What do you think I could realistically buy? What could I borrow? That way, if you come to me with realistic expectations, we're halfway there.
Yeah. 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 Yeah, BDC is great on especially on the small, medium-sized
Yes.
businesses when you're looking to acquire those. You're going to pay a little bit more of an interest rate than you would at the typical A lenders, but i- they're there for that purpose. They're there as an entrepreneurial bank, so they definitely serve the purpose for that. So if I had a business that I wanted to sell, or somebody sitting there thinking, yeah, I do need to go through this sale process, or I need to do ABC to prep it. Why use a broker versus selling on their own?
Okay. First of all, you're in the business of selling widgets.
Yeah.
I'm in the business of selling businesses. I wouldn't pretend to know how to do your job.
Hmm.
Second, I mean, just the level of expertise and knowledge that we have to properly get everything ready to go, to put together the right package instead of like just having a few financials. Because yeah, financials are important. That they may be the backbone, but they're not everything. Secondly, there's a lot of work involved. I mean, like anything, sometimes it goes smoothly and it's not bad. And other times you're pulling your hair out. I'm in the middle of one of those deals as we speak. And you need to focus on your business. The last thing you want to do is be distracted and take your foot off the gas, because that's going to affect your bottom line, your saleability, bar none. We could go to market with your financials that are from December 31, 3 months ago, 6 months ago. The first thing a buyer asks for, could I get some year-to-date numbers? Okay. Another thing is confidentiality. That is like discretion is our middle name. And you do not want your staff, your competitors, your vendors, or your clients to find out. And that's a lot harder if you're the front man on the deal. Okay. We, we can do everything we do without letting the cat out of the bag. So yeah, there are a few good reasons. It doesn't mean you can't. I'm not going to stand here or sit here and tell you that there's no way you can do it on your own. But you're likely to get a better price. You're likely to find, like, have way more buyers come to you, because again, we know where to advertise. How we have our own lists of people, and we can prevent you from making some of the simplest, most common mistakes that we've already seen in the past, and prevent you again from killing a deal or losing a good buyer or whatever.
Yeah, I think from the seller's perspective, a lot of the time, the most important thing for them is going to be that sale price. And I don't know if there is statistics on this, but from what I've seen, businesses that use a broker on that sale typically are getting a fairly significantly higher purchase price. And I do think a lot of that is they're helping them, they're coaching them to take out those personal expenses, to make sure all the revenue's in there, to do all those things that the buyer looks and says, okay, yes, I understand your business is worth this because you've shown it and presented it properly.
Yeah. I cannot, like, yes, and I've heard and read the same thing. I can't tell you, and I can't categorically prove that, oh yes, 100 businesses with and without. What I can say with a lot of confidence is that your chances of selling, period, grow dramatically. Because again, we know what we're doing. Imagine if you were about to tear down an old house and rebuild it yourself, and you're going to act as the GC and the developer. You've never done it before. You're an accountant by trade, and yeah, maybe you can muddle through it. Yes, it takes you a lot longer. You make a lot of mistakes, and the odds are you're not going to build the house that's most easily or most desirable in the market today. And you're not going to build it as quick as you could and as efficiently, as cost effectively as you could. Yeah, but maybe you could do it, but yeah.
The house might fall down, especially if I built it.
Well, I'm still assuming that as a GC, you're having somebody else frame it, but but still, it's yeah. So
yeah, no, that makes sense. What's on the horizon for you over the next little while? What are you looking to do?
like personal or private or
maybe business wise, personally, yeah.
Well, I mean, I'm in the middle of just upgrading my systems in-house, like as far as CRM, become more efficient in that regard.
Yeah.
I want to bring on a little bit more help. I can honestly say I am busier today than I have ever been. To the point I've actually, turned down my advertising a little bit.
Oh yeah, yeah.
And started to raise that bar a little bit, because I want to give the best service I can. If anyone sees my Google ratings on the online, you'll see they're good. And I try, it takes time, it takes effort to get there. And I don't want to just say yes to everybody and then give poor service. So right now I'm trying to expand my capacity, to put it simply. And I believe, we're on track to doing that.
Good. No, that's great. If somebody wanted to get a hold of you, maybe get on that mailing list, connect with you, where would they go?
You can go directly to murphybusinessalberta.ca. That'll get you there, or Google it, Murphy Business Alberta. I happen to be the only franchisee in Alberta at the time, so
Okay.
it's hard to not find me unless you're in Timbuktu.
Gotcha. And that's on the buyer, the seller side. They can both go
Sure.
there and look for you there. Awesome.
Absolutely. And again, like I said, typically I'm working directly with the seller, but there is certain amount of services that I can offer a buyer. Absolutely.
Yeah. Okay. Well, thanks for joining us on the show today, Steve. Certainly had a great chat with you on that, and wish you all the best moving forward here.
My pleasure. Thanks for having me.
Thank you.
You've been listening to Beyond Wealth, Success Unscripted with Matt Calnan. Want to be our next guest? Visit beyondwealthpodcast.ca/guest. See you on the next episode.